Over the years, Bitcoin has been following a predictable macro trend, global liquidity. However, Bitcoin is lagging. At the moment, Bitcoin is in sell-off mode. So are you also wondering when the recovery will happen? In this video, we'll take a look at this M2 Global Liquidity Index indicator, and it might tell us when Bitcoin will turn around back to the upside. So let's take a look at it. Let's go. Yeah, hello, my name is Ben, and in this video we want to take a look at the Global Liquidity Index indicator on TradingView. We'll take a look at when Bitcoin might recover, because Bitcoin historically has been lagging behind global liquidity. So if you stay until the end, we might even be able to define when exactly the price is going to turn around. Of course, that will be experimental. We will also take a look at the DXY because it is important for global liquidity. And I would say, let's just start. So before we dive actually into the charts and before we compare Bitcoin's price to global liquidity index, I want to show you a few things in this article just that talk about global liquidity. I believe it's very important to understand when the Fed is going to continue with quantitative easing. Yeah. So there are a few infos in this article which came out today. It's on Bloomberg. It's a premium article. So just a few things here. So first of all, currently it's expected that the Fed will implement another rate cut as early as July. That is important because it's a bit earlier than what people expected before. I think it's they now say that the Fed's next monetary easing will arrive 2 months earlier than was expected just last week. That's kind of positive because going ahead with rate cuts improves global liquidity. It has a positive impact. Yeah. Also this week, very, very important, on Friday, PCE data, inflation data. They say here from expectations point of view, the Fed's preferred inflation gauge is expected to cool to the slowest since June. And so that is, but obviously it still keeps, it's still very high, but overall it seems to cool down a little bit. Now that's also good because it might allow the Fed to decrease the rates a little bit. And then obviously, what creates the current selling pressure in the markets? Bitcoin is affected. What is it? People are looking for reasons. At the moment, the crypto market is a little bit correlated to the stock market again. That is not always the case. At the moment, we see that. Again, it's not always the case, but here's some commentary. And at the moment, the market, this is relating to the S&P 500, but we saw a sell-off today in the last few days in the stock market as well. And here the reasons are, and it all comes down to sentiment. You know that we are covering the markets from an Elliott wave point of view. So we are very interested in global, in market sentiment really. In market sentiment, mass sentiment, market psychology. And this here is talking about investor confusion. Yeah, we're currently in a correction. So technically from a correction point of view, the market is typically then in a state of confusion. We've talked about that in our videos about Bitcoin in the last few days. I've been highlighting constantly that lots of uncertainty. The market itself doesn't really know where it wants to go, and we've seen that on the S&P 500 as well. Now, interesting is that they say that there is a natural consolidation period at the moment after obviously recent gains. Now, let me show you this indicator here, which is the S&P 500 seasonal index, and you see that sort of in the second half of February historically it's quite weak. Precisely what we see. Now keep it in mind, because when we talk about liquidity, the liquidity index, we will define when the market could go up again. And here the S&P 500 at least index seasonality shows that sort of in the first half of March typically there's an upside reversal. Now this is monthly averages for the SPX over past 20 years. So there is some data there in the background. Now also important for a potentially positive outlook is the comment here about, however, the strong macro backdrop, robust earnings and healthy fund flows argue for a breakout to the upside once momentum returns. Now that paves the way potentially for a Bitcoin upside breakout as well. Let's also take a look at the DXY before we take a look at Bitcoin, because what does the DXY have to do with global liquidity? Typically, a weaker DXY is positive for global liquidity as the dollar weakens. Debt repayments are easier worldwide. That improves typically global liquidity, just one reason. And there is a chance that the DXY starts a downtrend from here. Now we might go a little higher in the short term, but there is a setup for lower prices. It's not fully confirmed yet, but for now I'm watching if the market can generate an initial 5-wave decline. Current resistance around $108, $109. So as long as we now stay below $109, form 5 waves down, and then rally in a corrective structure, which means to form a higher low, no, a lower high in wave 2, that might be a setup for lower prices. So we will follow that across the in the coming weeks. So if you wanna know more about that, make sure that you subscribe to the channel here. This is something I'm going to track in various videos going forward, because the forecast is for a DXY dollar index to drop into the mid-low $90 region. Yeah, we talked in previous videos about Trump's motivation to have a weaker dollar potentially. Now, this is the M2 Global Liquidity Index. It's not a standard indicator on TradingView, but what you see here on the chart is not only that, you also see the Bitcoin chart highlighted here. Yeah, this is the Bitcoin chart, Bitcoin price, and in yellow, you see that Global Liquidity Index, which tracks global liquidity in major economies. And as you might see it, yeah, you might see it, there is a certain correlation there. It is maybe not perfect. And why is it not perfect? Because it seems to be a little bit delayed. There seems to be a little bit of a delay in the Bitcoin chart. Yeah, we'll take a look at that now in more detail, and we will be able to shift them around. And then if you stay till the end, we might actually come up with a date when the Bitcoin chart is going to turn around, because the the Global Liquidity Index here, M2, it is currently moving up. So if we zoom out a little bit, what you can actually see is that this is global liquidity, and it has been going up. Obviously, there has been, after 2020, a significant rise. We all know what happened then. And then from 2022, we've seen sort of dip and stagnation. But now in 2025, or end of 2024, and also now in 2025, it's growing again. And I would expect this to continue in 2025. M2 to go up. Now, careful, we can't use this to predict every single dip and small recovery on the smaller time frame on the Bitcoin chart. This is more for a macro point of view. So I'm not going to use this to try to call a small swing low on the Bitcoin chart. This is more about the macro perspective. And we also see it's not correlating every single time. I mean, but I'd say it might be there like 70 to 80% of the time they are actually correlated. And yes, typically with a small delay. So Bitcoin is typically chasing after global liquidity. So that also kind of makes sense. Global liquidity is coming into the system, or liquidity is coming into the system. Money is flowing into the markets, and that can then find its way into high risk assets. Even though I would actually argue that Bitcoin isn't necessarily a high risk asset anymore. Let me know what you think about that. We've discussed that in the recent video about the DXY, right? Where I kind of commented about Bitcoin being more of a digital gold, because it doesn't relate so much to the DXY anymore in a negative. So they're not that inversely correlated anymore as they might have been in the past. However, altcoins are obviously more high risk assets. Bitcoin is becoming more of a portfolio asset. Obviously, it's a gradual process. Now, so again, just to build my case here, again, it's not perfect, but if it works like 70 to 80% of the time, that's better than most indicators that you will find. And I would only use it on the macro level. So as you can see here, there are significant swing lows. Sometimes it is really, really well correlating with Bitcoin. So for example, we can identify that there was a swing low here on global liquidity in November 22, and Bitcoin also showed a significant swing low. So that might have marked actually the end of the bear market for Bitcoin. Yeah, well, it did. However, you can see that global liquidity bottomed out a little sort of in that area, formed two swing lows, and this actually looks a little bit as if this relates to these swing lows here on the Bitcoin chart in November and December 22. So Bitcoin was a little later. Yeah, it was a little bit later. Okay, can we find any more evidence that Bitcoin is lagging behind? I would argue yes. For example, from the, oops, I just need to shift this into place here. So, I mean, you can see how Bitcoin, how a significant swing low formed here in 2018 on the Global Liquidity Index here, and then it started a rally, and Bitcoin bottomed out a bit later, yeah, in 2018, and really only started to rally then came back again, and then continued the rally. But we have a little bit of a delay there. And I think we can see that even better if we take a look at the recent past. So let me zoom in here a little bit. It's difficult here to adjust this properly. But you can see that the yellow line, or the yellow indicators, or M2, formed a low in June 24. Well, it took Bitcoin sort of until early, I think it's 5th of August, when Bitcoin then started the rally. Okay, so again, M2 a little bit in advance, rallied a little bit earlier. And then we also saw this current correction start a little bit earlier, okay? So I'd say probably like a couple of months earlier. Now, I would say what we do now, we try to move these together. And when we move them together, then we might be able to identify how far behind is Bitcoin actually. And then basing it on the latest swing low, which seems to be a significant one here on M2, we will try to identify the day, maybe even the week or even the day when Bitcoin could recover as well. Because it seems to me as if what happens here is what Bitcoin is doing now. Okay, so a bit unclear if this is the correction or this. You know, obviously we can't relate it to every single dip, but it's more about understanding sort of the macro, okay, and that the bigger picture aligns. Okay, so. And again, you see here that Global Liquidity topped out at just another example in January 23. And then sort of in March, Bitcoin in 23 topped out locally at least. Yeah, and then was moving into this correction. And then we started a recovery. But it's not always perfect. It's also not always that Global Liquidity is moving before Bitcoin. So it's more important to understand where are we now. Okay, currently it seems like that Global Liquidity is moving a little bit before Bitcoin, a little bit ahead. It's taking the lead, but we need to monitor that. So something that we discussed today, I mean, as new data comes in, we might have to adjust that, right? So just wanted to shift that a bit lower. So, okay. So how can we try to bring them together? What I would like to do is to put this swing high, which was a significant one in October 24, and try to move it over here to the December highs. Now I've moved from the 4-day chart over to the daily chart because here we can see it a little bit better, and when we now try to move them together, it might be a little bit more accurate. So here on the daily chart, so how can I move that over? We want to reduce the offset now. No, actually we want to bring them together so they perfectly correlate. That might tell us when Bitcoin might bottom out. So when Bitcoin basically is down here, right? So because there is this Bitcoin is basically lagging behind. So we want to see if we can shift them over together. And because this is a script, I just have to change the offset here. I have to increase or include an offset actually. So let's see what happens if I move that over to the right. So this is 40 days. That means I've now moved the indicator 40 days to the right. That means there is this offset that doesn't seem to be enough. So let's pick 50. Better. I want to have these two swing highs kind of together. That would be ideal. Let's try 55. So around about 1.5 months. Nearly. I mean, the question is even, is it this swing high? Is it this swing high? But look at this entire correction. I think this is what we need to base it on. And it seems like it might need to be shifted just slightly more. I want to have this top and this top kind of aligned. So we might talk about 2 months there. Sorry, 2 months, yeah. 60 days. So is that it? Could that be it? Roughly. I mean, this aligns pretty well with this rally. So maybe we leave it like that. Okay, we could try 65. Again, we won't be able to have it 100%. Yeah, maybe that's even better. What do you think? So what does that give us? I mean, it gives us 65-day, let's say, a gap between them. What it shows now is that, yeah, we're kind of moving down now. Maybe something that the M2 already did. At some point, we should see a bottoming out in case they really move together. And I mean, don't expect it now to go down to 60K, 50K. This is not, how it should be read. This just helps to understand where we currently are here in the cycle, sort of to understand tendencies. What I try to communicate is here that yes, the M2 was already before Bitcoin because it's lagging in a correction, if you will. So we had a small decline in global liquidity, but now it's picking up again. And now if we reduce that, or if we eliminate that gap between them, where is the low on M2? And it's around the 17th of March. So kind of middle of March. Remember what we saw on the seasonality index for the S&P 500. And Bitcoin and the S&P are also aligned. They might kind of move together. So that's something that, together with all the positive information we read in the article in the beginning, might hint at a recovery. Also, the previous videos I made about Bitcoin here on this channel, they included some on-chain data, which also still allow for the interpretation that we haven't reached a cycle top yet. Also, for us important is the Elliott wave structure that I'm not going to talk about today, but if you watch previous updates here on this channel, from an Elliott wave point of view, we could also get one more high to possibly round about 130, maybe 140K for Bitcoin before a major top occurs. But again, it's important that you watch these videos as well, that you at least get an understanding what my view is about the Elliott wave structure, because from an Elliott wave point of view, there is a lot to understand. The risk is high. We are already in a topping area for Bitcoin. But what I want to communicate is there could still be another substantial swing low that could maybe form early or maybe middle of March. Again, it's not perfect. I mean, there might be 1 or 2 weeks still, how do you say, uncertainty there. There might be this, you can't predict a bottom based on this alone. We have to track it. But it kind of is interesting that we have very much this correlation. This correlation has been very, very accurate since January 2024. So all of 2024, it's pretty much correlated perfectly with the gap, which we've now eliminated by shifting the indicator. And that basically tells us there's a chance that Bitcoin could also bottom out in March, maybe mid-March. I mean, assuming that we are now correcting. For that, on the micro level, we have to follow the daily Elliott wave structures. That is leading for me. I'm primarily an Elliott wave analyst, but on this channel, we take a look at additional indicators. We try to combine it with Elliott wave to get, let's say, to support the thesis, especially on the macro level. And on the macro level, my idea for Bitcoin, and I will show you just briefly, in case you haven't watched previous updates, I will just briefly show you my long-term chart before we finish this video. So this could be very interesting because this is what is leading for me. Yeah, this is for me the main indicator, the Elliott waves, not M2, not anything else, but the Elliott waves. And the Elliott wave structures still allow here for one more high, possibly to target 130, 140K. And yeah, this is the way for this dip that we saw on M2 potentially, and M2 is already moving up, and that could be the fifth wave for Bitcoin, and then we could start a larger correction. There are different scenarios here, but most of them allow, at least on the micro level, for one more high before a more substantial top forms. Yeah. So yeah, this is what I wanted to show you. I think it's not looking too bad. We talked in previous updates and watched them on this channel about on-chain indicators. They're still up to date. They also all paint a picture that at least another high is definitely on the agenda for this cycle. Doesn't mean it definitely has to happen, but the indicators show that. But because most of these on-chain indicators are lagging indicators, they are very much based on previous cycles, and this cycle is different, I primarily use the Elliott waves. But we want to understand, are there other indicators that also tell the same thing, like M2 I think is. Let me know if you agree or not. I find it very interesting. The DXY could also point to the downside, which could also improve global liquidity. So quite interesting. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe, and make sure that you follow us here on this channel going forward. Activate the notification bell. Thank you very much. Bye-bye.